Look at the chart. RSI goes above 70. What do most beginners do? They sell because they learn one simple rule. Above 70 means overbought. But then something strange happens. Price does not fall. It keeps going higher. So the trader thinks RSI is not working, but the truth is something completely different. In this lesson, I will show you three things. Why RSI can stay above 70 for a long time, what it really tells us about market strength, and how smart traders use this behavior to find better buying opportunities. And once you see this on the chart, you will never look at RSI the same way again. So stay with me until the end. What most people learn about RSI. When most beginners learn RSI, they are taught a very simple rule. If RSI goes above 70, the market is overbought. If RSI goes below 30, the market is oversold. At first, this makes sense. If price goes up a lot, it should calm down. If price falls a lot, it should bounce. But here's the problem. The market does not always move in a balanced way. Sometimes the market enters a strong trend. And when that happens, the behavior of RSI changes. So you should not look at RSI alone. You need to look at the context of the market. Before you interpret RSI, ask yourself a simple question. Is the market in a strong trend? Is the trend weak? Or is the market simply moving sideways? Once you understand the type of the market, it becomes much easier to interpret RSI. But here's the question. How can you tell the trend is strong or weak? In the next section, I will show you a simple way to measure the strength of the trend. How to measure trend strength? So how can we tell if the trend is strong or weak? One simple tool traders use is called ADX indicator. ADX stands for Average Directional Index, and its job is very simple. It measures the strength of a trend. But here's something important to understand. ADX does not tell us the direction of the market. It does not tell us if the market is going up or down. It only tells us one thing, how strong the trend is. When ADX is low, it means the market is weak or moving sideways. When ADX starts rising, it means the trend is becoming stronger. Many traders use a simple guideline. If ADX is below 20, the market has no strong trend. It's often moving sideways or it's very quiet. If ADX is between 20 and 25, the market is in a transition zone. A trend may be starting to form, but it's not fully confirmed yet. If ADX moves above 25, it means the strong trend is finally developing. Nothing about what happens during a strong uptrend. Buyers keep pushing the price higher. Buying pressure stays strong, and this is exactly when RSI can stay above 70 for a long time. So, RSI above 70 is not always a sign that the market will fall. Sometimes it simply means the trend is powerful, and this is where ADX helps us. When RSI stays above 70 for at least 3 candles, don't panic and don't sell. Instead, immediately check the ADX indicator. If ADX is above 25 and rising, it tells you one clear message. The uptrend is strong. And when the trend is strong, RSI can stay above 70 for a very long time. Smart way to trade RSI in a strong trend. Now imagine you see this situation. RSI is above 70 for at least 3 candles and ADX is above 25. So does that mean there is no trading opportunity? Of course not. When we say the market is in a strong uptrend, it does not mean price will go up in a straight line forever. Markets needs to breathe. Even the strongest trends sometimes pause and reset. Think of it like a heartbeat. The market pushes higher to build momentum, then pauses to attract new buyers at better prices. This is a wave pattern of a trend. The first push shows that buyers are in control. Then the market pulls back a little. But this pullback does not mean the trend is over. It simply means the market is taking a short pause. After that pause, buyers often step in again and push the price higher. And these small pullbacks are exactly where many experienced traders look for new buying opportunities. Before we continue, Let me quickly remind you of something important. In trading, there are generally three types of strategies: trend continuation, trend reversal, and range trading. I have a separate video where I explain this concept in detail. If you want to understand the bigger picture, I highly recommend watching it. The link is in the description. Now let's return to our lesson. As we said, strong trends don't move in a straight line. They move in waves, and these waves create opportunities. So here's a simple strategy to trade pullbacks. Condition 1. The market must be in a strong uptrend. You already know the signs. RSI moved above 70 for at least 3 candles, and ADX is rising above 25. This tells you the trend has a strength and momentum. Condition 2. Wait for a pullback. Price drops slightly, maybe 1 or 2 candles. Maybe it returns to a small support level or a trend line. This is completely normal. Even strong trends need time to breathe. Condition 3. RSI pulls back from 70 toward the 50 or 60 area. This is the key point. RSI should not fall below 50. If it stays above 50, it shows that buyers are still in control. In other words, the pullback is temporary, not a trend reversal. Condition 4. Wait for a bullish confirmation candle. This could be a bullish engulfing candle, a pin bar, a strong green candle, or simply a candle that clearly rejects a support level. This candle tells you that buyers are stepping back into the market. When all 4 conditions appear together, you have a high probability to trade pullbacks in a strong uptrend. This is how you use RSI and ADX together, not to fight the trend, but to ride it. Real market example. Now let's look at a real example on the chart. First, notice what happens here. Price is clearly moving higher. We can see a series of higher highs and higher lows. That already tells us the market is in an uptrend. Now look at the RSI. You can see that RSI moved above 70 and stayed there for several candles. At the same time, ADX is above 25 and rising. This tells us the trend has strong momentum. But notice what happens next. Price does not keep going up immediately. Instead, the market pulls back slightly. At this time, RSI starts to cool down. It drops from above 70 and moves toward the 50 to 60 area. This is exactly what we want to see. RSI is not collapsing below 50. It's simply retesting while the trend remains strong. Now look at this candle here. This candle rejects the pullback and closes bullish. This is our confirmation that buyers are stepping back into the market. So at this point, all 4 conditions are met. The trend is strong. Price made a small pullback. RSI reset toward 50 to 60. And we have a bullish confirmation candle. This is where many traders would look for an opportunity to trade pullback, and as you can see, after this point, price continues moving higher with the trend. Okay, that's it for today's lesson. Remember, RSI above 70 does not always mean the market will fall. In a strong trend, it often shows strong momentum. Instead of selling, wait for the pullback. Watch RSI reset toward 50 to 60 area and look for a bullish confirmation to join the trend. If you found this lesson helpful, like and subscribe for more practical strategies. Thanks for watching, and I see you in the next video.